What's going on, everyone? We hope you had a great weekend and are ready for an action-packed week in the market because there is a lot going on right now. On Friday, the employment data sent the markets into full-on panic mode, and 87% of the S&P 500 closed down in the red. While this is happening, there's a decent chance that TikTok might get banned. On top of that, the California wildfires are still going crazy, and there is a lot going on right now. In today's video, we're going to refresh you on everything you have to know about and more, and we have some key setups to keep close on the radar. But either way, we have a lot to talk about today, so Tom, let's not waste any time and let's get right to it.
Yeah, the market was pretty brutal on Friday. That was a pretty bloody heat map, and everybody's probably like, hey, what really caused this to happen, and why is the market selling off as much as it is? And it's really coming down to those jobs numbers that came out on Friday. So there was a big jobs report that came out, and it actually showed that payrolls grew. Right? And that's great. And actually, the unemployment rate went down a little bit. So initially, traders are probably like, hey, this is amazing, right? We're seeing the jobs numbers start to actually pick up a little bit. That's good, right? But it's actually a bad thing because what this does is it pushes the feds more towards pausing or even rate hikes. So this is a pretty weird situation now with how these jobs numbers are starting to come in, and it's just a pretty bad sign, and the market obviously did not like this, and it was actually so large that a lot of the big banks came out and actually revised their outlooks on rate cuts, and Bank of America doesn't even see any rate cuts now in 2025.
Yeah, so this is a pretty crazy situation. So basically what's happening right now is the jobs market is not only really strong, but it's a lot stronger than anyone even wants it to be. And it's so strong where everyone's kind of looking at the Fed now and being like, okay, we know you guys aren't going to cut rates at this point. And people are starting to get a little bit uneasy about that because that's not going to be a great sign for the stock market, at least in the short term. So essentially what we are now trending towards are higher rates than everyone was expecting, and that is not something that's necessarily good for stocks. And in even scarier sense, when you look at the US 10-year Treasury yield, it is getting closer and closer to 5%. Right now it's at 4.76%, and just a couple months ago it was at like 3.6%. So it is trending not only in a major way, but in a very quick way. And this does present risks for the stock market going forward. So basically, this is like a big situation, and we have not seen a run this large with Treasury yields in quite a long time.
Yeah, and I noticed that on this uptrend with the yield starting to pick up, a lot of this started to happen on December 18th. This is whenever we started to really see this trend start to pick back up to the upside, and this was whenever the FOMC meeting happened last, and that was a big deal for the stock market. Ever since that meeting on December 18th, the market has been pretty much stuck to the downside. You can see this nasty red candle here where that meeting happened on that day, and of course, everybody right now, Mike, is like, well, hey, what's really going to happen in 2025? And I think that there's a lot of uncertainty out there, and that's part of what's causing this big sell-off with the market. And we can actually look at the FedWatch tool and see what traders in the market is pricing in. It looks like the market is pricing in still one cut in 2025. It looks like it's going to happen on the July 30th meeting, but nonetheless, this will probably change a lot over the next couple of months, so keep that in mind. Nothing's going to be like set in stone right now, that's for sure.
Yeah, like a lot of traders and investors just got a rude awakening over these like past few weeks to past few months because their rate cut expectations just got taken right from them. So basically in the short term, look at how people are getting more bearish than they have been over recent months. And I think the recent price action definitely goes to show that. As we can see by looking at this recent sell-off, one key thing that we talked a lot about last week, and that's certainly worth keeping in mind in the short term, is that what big tech stocks do have a massive influence on what the market does. So stocks like Microsoft, Apple, Tesla, Amazon, Nvidia, stocks like that are stocks that you have to keep on your radar, whether you plan on trading them or you don't, because they not only have a direct major influence on what the market will do, but they also have a huge influence on just investor sentiment overall.
Yeah, and investor sentiment has definitely been shifting a lot lately. We can go look at a lot of the chip stocks that they were actually starting to do pretty good. But then last week, of course, we saw this massive sell-off start to pick back up. And even big tech stocks like Nvidia, they were pushing towards highs, but now they're seeing a big double top and rejection back down. Even the other big tech stocks like Apple has been very bearish here over the past few weeks. So we're definitely seeing a big shift here in the short term. Make sure to keep your eyes on maybe SPXS. This could be an ETF to play for whenever the S&P 500 drops, or the SQQQ, which will be for like when the NASDAQ drops. And since we're talking about tech specifically, the SQQQ could be pretty advantageous.
No doubt. So either way, keep it close on the radar. But another thing that is certainly getting a lot of attention right now is how TikTok is pretty close to getting banned. So basically what's happening is that there's a January 19th deadline set for TikTok to divest from its China-based parent holding company. If this does not happen, TikTok could be removed from app stores and online platforms in the US. But here's the thing. There is potential for a 90-day delay / grace period if TikTok demonstrates progress in finding a US-based owner. So basically, everyone is currently currently in a situation where there's a very real chance that TikTok could be banned pretty soon, and we could see even Polymarket has it priced in as a 71% chance of TikTok getting banned in the US before May of 2025, which, to be honest, was a lot larger than I was expecting in terms of probability. So a lot of people are looking at stocks like Meta and Google because they do have the most to gain from that if TikTok does get banned, because as we know, Meta has everything to do with Facebook and Instagram, which, certainly is a big competitor to TikTok, and Google has YouTube.
Yeah, and somehow Meta even squeaked out a green day on Friday because of this news. There was a lot of hype with this on Friday. And of course, Meta's also at a very key point, right around the key $600 support, which it also touched on Friday. But I can't believe it that on a day where we see this many large tech stocks down in the red, Meta somehow squeaked out green, and it was mainly because of this news where people are getting pretty excited with this, and there's a lot of people that are on TikTok that are trying to push their followers, so to say, to switch over to Instagram or YouTube to continue going, right? Because there's a lot of people out there that make money on TikTok, and obviously they're gonna go somewhere.
No doubt about that. So either way, this will be very interesting to see unfold. Keep a close eye on Meta and Google stocks in the short term, and keep a close eye on recent news, and this is a topic that we will definitely be covering closely. But another thing that is pretty big that's going on right now are these wildfires in California, as we all know. So it's still too early, but this is actually set to be the costliest wildfire in U.S. history, and potentially even one of the most costliest natural disasters in general in U.S. history. The current damage estimates right now are around that 135 to $150 billion range. At least 16 people died, 37,000 acres have been destroyed, and over 12,000 structures. It is a devastating situation. We did cover this news last week, and in a stock-specific sense, a lot of California utility companies are tied closely to this. When you look at ticker symbols PCG and EIX, these stocks are moving the most, and they're taking a beating.
Yeah, to say the least, right? That is a huge sell-off out of EIX and even PCG, which, as we know from the past wildfires, has taken a big toll on the stock. So it's definitely falling down a lot. Another 10% down day for them. Going to EIX, they were down 6.47%. So there is some pretty massive sell-offs going on with these. I wonder how many days these sell-offs will last, but my prayers definitely go out to everybody affected by these fires. I mean, you can look at some of the before and after pictures with the before on the top here, seeing all the homes, then the after where you're just seeing every single one destroyed. It's a pretty insane thing, and some of the pictures and stuff are definitely pretty wild, right? We don't see this happen all the time where it's this deadly, but I know California is known for these fires, but whenever we see this much destruction, it's a rough thing to see.
Yeah, it's devastating. So, yeah, it's a crazy situation. In a stock sense, these two stocks are definitely moving the most off of it. So definitely keep them on the radar. But in general right now, we are seeing a lot happen in the market as a whole. As we've seen from Friday's price action, it's definitely getting more bearish, and it's definitely a different market environment than we've seen throughout 2024. So, Tom, what are the key things to keep on the radar with SPY right now, and what should we look at in terms of charts?
Yeah, SPY's been really stuck in this big range here. So we're going to be watching for the recent lows to come back into play. And SPY on Friday got pretty close to them. The recent low is more officially right around 577.75. On Friday, we got to around 578.50. So we actually broke under the key 580 mark that we were watching as well. This was a pretty bad breakdown on Friday, and it showed that structure is starting to change a little bit. We were actually seeing higher lows coming into play. But with that move on Friday, that higher low trend is now wiped out, and the trend of lower highs overhead is still in play. So this is a pretty bearish sign right now for the SPY. And like I said, that recent low has to be on watch, right around like 578 to 577.75. I'm also watching 575 and 574 as some pretty key supports underneath here. But that recent low is definitely going to be the main thing I'm watching this week. And if the SPY does pop back, I do like 585 and then 590 as some pretty good resistances.
No doubt, and I think that 577.80 area is going to be crucial in the short term. That is a very important recent low, and if we see a breakthrough that with momentum, that will say a lot. Like you said, we do have a handful of important resistance levels above us as well. The market's getting weaker, and the environment is changing. This is not a bad thing. You just have to adapt to it, because the market environment is always going to change. It's not always just going to be bull fest every day like we saw in 2024. The people that are doing the best right now are those who are, basically just like riding the momentum of the day and just, not really getting attached to one side or another. In market environments like this one, we see bigger, stronger moves to the downside, but also to the upside as well. And as we've seen over recent weeks, some days the market is not only green, but it's green in like a pretty strong way. So basically, look where the momentum's at, follow the money, and, protect your positions in like a, smart, risk-defined way. And that applies not only in like an ultra short-term sense in terms of scalping, but even like medium-term trades as well. So either way, keep this close on watch. And then another thing to be aware of, Tom, is we actually have a handful of, pretty important events and earnings for this week.
Yeah, we do. Things are definitely picking back up here at the beginning of the year, Mike, and it looks like this week there's quite a bit here. So we're going to have PPI data on Tuesday, January 14th, 1 hour before the market opens. On Wednesday, 1 hour before the market opens as well, we're going to have core inflation data and, of course, just the inflation rate overall coming out, so definitely be ready on Wednesday. Inflation data is very, very important, and you can see the year-over-year rate here. They're actually expecting a bit of an uptick with it, so be ready for some crazy headlines coming out Wednesday. Thursday, we have retail sales. Then Friday, building permits and housing starts. It is quite the rundown this week for the economic events, and earnings is picking back up too.
Yeah, look at that. So we actually have the big banks set to kick off earnings season. We have JP Morgan, Citigroup, and Wells Fargo set to report on Wednesday before open. And then on Thursday before open, we have Goldman Sachs, Bank of America, Morgan Stanley, USB, and a handful of other ones, plus some like big tech stocks, or I don't want to say big tech stocks, but important tech stocks like TSM. We have United Health on Thursday before open as well. So it should definitely be a pretty exciting week. And Tom, for like the first time, and I think like 3 weeks, there's actually no stock market holiday closure, or just closure in general. So that's nice to see. But we will actually have MLK Day on Monday, so the market will be closed a week from now, and that will be the Trump's inauguration as well. So we're definitely set for a pretty exciting short-term run in the market. But besides that, let's get right to some setups and predictions. A stock that is close on my radar right now is Netflix, and it is to the downside. Basically, Netflix has been struggling quite a bit over recent weeks, and it's actually the 21st heaviest weighted company in the entire S&P 500. And basically, as we look at Netflix right now, there is some pretty strong support right around 830, 820, 810, and even around like that 807 area. And then with the major level being around 800. But right now the stock is at like 836, and it's continuing to downtrend and weaken in general. Netflix is a stock that we've covered in a bearish way a handful of times over recent weeks, and I'm happy to see this downtrend. There is some strong resistance right around 860, but either way, Netflix is a stock that'll definitely be on my bearish radar, not only for tomorrow, but even just over like these next couple weeks in general.
Yeah, that was a pretty massive sell-off here by Netflix, and you can tell it was on a pretty massive run, and honestly, this pullback seems like it's just beginning, so I'll definitely be keeping it on the radar too, Mike. And there's another stock that has been pulling back a lot lately, and that is AMD, formerly known as Advanced Money Destroyer. No, I'm kidding, informally known, but nonetheless, this stock has been pretty rough in the short term, and AMD on Friday broke through a major support, so I'm really watching for a continuation of this downtrend with Advanced Money Destroyer. And we actually have some good data on the Bookmap here with AMD as well. If you guys are interested in Bookmap, definitely check out the link in the description down below. But there's a lot of buyers stacking up around 114 to 115. You can see that right here with the two red lines. The darker the red, the more the buyers that are stacked up. So these are some pretty big stacks. If we see a breakdown of 114, I will be watching for a move towards 110, which is where the next big stack of buyers is, with 177,000 shares at that 110 mark. So if we see a breakdown of 114, that's where I will be watching for this good continuation. But shout out to Bookmap here for the X-ray vision. I love seeing these buyers stacked up because we want to make sure that those break down before this play gets entered into.
There we go. All right, sounds good there. But another stock that is definitely on the radar is actually ticker symbol WBA. So I know this is actually kind of surprising because this one, it's very rare for it to go up, let alone up this much like we saw on Friday. But investors definitely like their earnings report as the stock popped up by 27%. Right now, it's right around that like $11.76 area. And it has some resistance right between like 12 and 12.30. And then after that, 12.65 and 13. Basically, it's uptrending in a strong way. The stock is very oversold in a broader sense. And the positioning with the stock is slowly starting to turn. It's moving in a pretty strong momentum-filled way, so it's definitely on my bullish radar for a short-term potential play, but I would like to see it hold that $11.25 support area. If it loses that, that will be kind of a rough sign, and under that, there is support at 11 and 10.65 as well. So this stock is riskier and different than most setups, but it's worth keeping on the radar.
Yeah, this is a pretty interesting setup with Walgreens. I know that we've been watching it for a while, and it's starting to trend really well off of the bottom of this base. This big money player really sniped this one really close to the bottom. So I don't know. That's a little bit of a sus trade there. I got to go see who did that. But nonetheless, with my next setup, I am looking at ticker symbol SQQQ, and I'm really trying to capitalize off of a lot of this downtrend in the market. You could also maybe look at puts on the QQQ if you want, or puts on SPY. But I think SQQQ will be an amazing ETF for people to play to the upside. You can see this has strong negative correlation to SPY, of course, and the QQQ as it kind of inverses it. But of course, this is a pretty big mover. It's a little bit risky. It was up 4.88% on Friday. But if we do see like a high of day break on it come Monday morning around 32.40, there could be a pretty decent move to the upside here. But just make sure that you're seeing that overall breakdown with the market and a lot of these big tech stocks.
All right, sounds good, and I will definitely keep that one on the radar. So sounds good there, and let's jump right into today's momentum plays. And with the first one, we have CEG to the upside.
CEG is pretty insane here. So if they break out above $310, keep watching them to the upside. They were up 25% Friday.
Dang. All right, with the next one, we have CCL also to the upside.
Carnival Cruise Lines. CCL's been doing pretty good in the short term. If they're able to break out above $24.32, then go ahead and look at them back to the upside. It's not at the high of day from Friday, but a pretty good resistance.
All right, and then with the last one, we have Affirm to the downside.
Yeah, poor Affirm really pulling back here. If they fall down below 54.75, keep watching Affirm to the downside. This is pretty much at the low of day from Friday.
All right, so we have Affirm on watch for a potential move lower, and then we have CCL and CEG on watch for potential moves to the upside. Either way, these three stocks are on watch for momentum plays if and only if they break through the levels listed. The stronger and more consistent these stocks move, the better the setups become. These stocks are volatile, so have stop losses and be more than happy to flow and adjust with the trend changes as they happen, as always. So keep that in mind, but besides that, let's jump right into today's $1.39 million big money trade, and we are looking at none other than Intel. So basically on Friday, the big money bought the Intel 17 strike call options that expire pretty soon, actually, for February 21st of 2025. This is basically a $1.4 million trade. Intel, as we know, is still struggling, and looks like the big money is buying this dip at a pretty major recent support level. So looking at Intel right now, I think this is a very interesting setup, and honestly, Tom, I'm pretty excited to see how it ends up playing out.
Yeah, anywhere from like $18.50 to $19 has acted as really good support here. It definitely seems like they're trying to snipe this one, and it's in the money too, so I wouldn't think that they're shorting these, so it gives me a little bit more confidence there. Overall, it's a great play with support. I think that risk-reward is really good here. Like, if we were to set this up with maybe, like, let's just say looking at the recent low as a potential stop loss, you'd be looking at maybe like somewhere right around $18.30 on the stop, and then, of course, we could maybe target a lot of good areas here to the upside. There's good resistance around 22. That might be a first good target, and then maybe even 23 to 25. If we start to test that recent high. But overall, pretty good setup here, and interesting big money play. Kind of reminds me of the Walgreens one, how they're trying to snipe it off support.
Yeah, definitely. And then what's also pretty interesting is that, it's a lot of capital into this trade. These strike prices are already deep in the money, and the expiration isn't that far out. So, like, the big money is placing like a bold trade with a deep in the money strike and a short-term expiration. So they're expecting a move pretty soon here. So either way, keep this one close on watch going forward. But with everything being said, Tom, I think we're set for a very exciting week. There's a lot going on in the market and the world right now, and honestly, it's not set to slow down anytime soon either. There's a lot of big events coming up over these next couple weeks. So there should be a lot of good trading opportunities in multiple different senses. If you guys are new to our channel, welcome, and consider obliterating that subscribe button. Basically, we cover the most important news, information, earnings, big money trades, and everything you have to know about the market in, a little bit over 20 minutes. Depends on how much we have to cover. But, if you want to get our videos recommended to you more often, definitely consider obliterating that subscribe button. But we also want to give a giant shout out to today's member of the day, Damper Wings. He had a great post on Friday. He had 2 great trades with some SPX put options and wrote an awesome message in the testimonials channel as well. It said basically like the recent weeks has been some of the best for his trading. So huge shout out to you, Damper Wings. Keep up the great work going forward, and it's awesome to see posts like these ones. Besides that, thank you all so much for watching, and let's crush it in the market this week.